makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. ARM's IPO book is set to close a day early after being oversubscribed by 10 times. It's likely to be the year's biggest listing. Tech Tuesday, Tesla drives gains on Wall Street after an analyst call. Apple is set to launch a new iPhone. Plus, UK wage growth remains at a record high, putting more pressure on the Bank of England to raise rates again. So let's take a look at the European markets map. A lot of the focus, of course, is on what we heard not only from, well, the big take is basically the strength of headline pay growth, and the latest jobs data is definitely keeping the Bank of England on course to hike again in September. Now, the picture across the board, certainly when it comes to the FTSE, we're seeing a little bit of gains across the board, a bit more downside pressure, of course, the CAC 40 and the DAX. So let's look at sterling. If you look at Bloomberg Economics and their very latest, the base case, they say, is whether this will be the last rate hike of the cycle. They're also seeing further signs of softening price pressures and a weakening economy. And so they basically say that, look, this coupled with recent communication from key policymakers means that there is a downside risk to their view. The other thing we're looking out for is, of course, Apple. Now, the new iPhone launches today. Keep an eye on the world's most valuable company. This is what the Apple stock price has been doing 1 year on. And then finally, the ARM IPO, I have to say, is without a doubt the story of the week. The IPO is ramping up. It has been a slow year, but there seems to be a lot of appetite. And so we'll keep a very close eye on how much it's been oversubscribed, if that tenfold figure does get confirmed, and what that means for final pricing. Now, that leads us, of course, to our big number. Bloomberg has learned that ARM's bankers are planning to stop taking orders for its IPO by this afternoon. And that's as the offering is already 10 times oversubscribed. Now, pricing is still expected tomorrow, trading on Thursday. It may even end up being 15 times oversubscribed. So let's bring in Bloomberg's Joe Easton. Joe, there's a lot going on. I don't know whether this is the pricing, right, that they just got a little bit wrong, and so it looks very appealing. So it's always better to underpromise, overdeliver, or whether this is a story about technology.
Yeah, I think the numbers that you showed there, obviously, it seems to have quite high demand. The question is where the demand comes from. If the demand came from the retail market, then they probably have a lower threshold for pain if the stock does start selling off in the first few days. And we've seen in tech IPOs in particular, the first few days often don't look pretty. In terms of the pricing, we'll find out how much they've left on the table for investors in terms of how much they want for that company. But in terms of the demand, you'd have to question where that's coming from, in my opinion.
Yeah, it's a good question. So joining us for a look at the markets and the global economy is also Invesco's head of multi-asset, Georgina Taylor. Georgina, when you look at ARM, I don't know whether this is a little bit symptomatic of where cash needs to go to, or what the read across this is.
Yeah, I think, look, it's a single stock, so I'm not quite so focused on that. But I think absolutely in terms of where people want to deploy cash. And so it'll be very interesting to see how this plays out and whether the sector themes continue that we've seen for such a long period of time. So yeah, a bit more kind of in the detail for me, but absolutely it'll be interesting to see how that plays out.
Yeah, and I know you don't look at a single stock. So, I mean, is it symptomatic, or actually money trying to find places, or is it something that you look at kind of from afar just because of the nature of what you do?
Yeah, I mean, I think, we look from afar, but what is interesting is how people are deploying cash in this type of market environment, and also what people look for in terms of returns, because where cash levels or cash rates are in terms of finding those opportunities. So, yeah, looking a little bit from afar, but, yeah, absolutely, I think it's symptomatic of where we are right now in markets.
Joe, what can you tell us about tech valuations in general? So we had Tesla, that got a big boost. Today, we're also expecting Apple.
Well, I think the chart that you showed on the screen with the Apple 1 year, obviously that big rally, and then over the past week there's been a lot of, well, quite negative comments around Apple given the China issues. I saw Citi analysts were quite bearish on that one, but I think where it's trading at the moment, there's obviously a lot of gains still in that stock, so I don't think there's too much negativity at the moment, I would say.
So you do our stocks to watch every day. Is
Yeah.
there a pattern to the stocks that are flying off the shelf? Is it margin pressures? Is it, you know, the ability to go up in price?
Yeah, I think that we're still seeing a lot of shares that had the sort of post-pandemic sell-off now coming back up, and I still there's still a lot of trades there good example. I'm going stock specific again, but HelloFresh today, JP Morgan recommending buying that one. That's the best performer in Europe today. So I think that we saw a normalisation after the COVID issues, and now a lot of those stocks are trading on low valuations, and those tend to be the ones that are getting a boost at the moment. And
Georgina, where do you see the most ongoing risks for equities overall?
I think it's policy still. I think we keep reverting back to the old playbook of as soon as we hit peak rates, rates will come down. And I think we've got a lot of evidence now that, well, we probably haven't hit peak rates yet, but they may not come down quickly. And I think, you know, from an equity market perspective, that poses a huge risk, not only from valuation, but also how much that chokes off growth. And we haven't really seen huge evidence of that yet. And I think earnings have kind of been okay. But I think because it's carried on so long, I think the market is interpreting that as, well, we've avoided it. We've come through it, and we've come through the pain, and we've come out the other side. And I think it might just be a little bit too early to call that.
But so do you worry about consumer spending or consumer behavior and savings, or do you worry more about refinancing and that companies in general have?
Yeah, I mean, I think it comes from both sides. So I think from a consumer perspective, that buffer is getting less in terms of that savings buffer that was built up during the pandemic. I think from a corporate perspective, you know, they've got away with it so far. The refinancing hasn't kicked in yet, so that's from next year onwards. So we're certainly focused on stronger balance sheet companies, even though it feels, again, people want a price coming out of that. I think it's still the place to be because that refinancing risk still comes ahead over the next 2 years.
And you prefer Germany versus France. Is that, on valuations? Because they're also a lot more exposed to the energy complex.
Yeah, I think you've got this manufacturing versus consumer theme. I think that the luxury goods stocks have shown us a hint of what can happen when things start to turn and people get worried about China. I think Germany and France are two core markets in Europe, but their performance differential has been huge. So we think there'll be a bit of reversal of that if we want some self-sustaining growth to come through from investment, and the DAX will benefit a little more from that versus France.
Do you see, I mean, again, you look at, some of these stocks day in, day out. Is there more stress in the companies that are more exposed to energy, for example?
Yeah, energy is an interesting one. Obviously, miners has been the big commodity story at the moment. Those stocks are trading at very good multiples now. I'm actually seeing a lot of people becoming more positive, think they've sold off too much. Energy is more difficult. I think the oil forecasts are mostly bearish, but I think the big thing with energy is obviously the dividends and buybacks still pretty strong. So energy is not so much of a weak spot. I'd say it's miners is where there might even be an opportunity, I think, in terms of some analysts.
To you both, but Joe, I mean, have we seen companies with a lot of distress calls? And if not, could it come in the fourth quarter?
Well, that's something that I've been looking at for a long time, is how much of in terms of interest rate rises, how much of that has been put through into analyst estimates on a number of sectors. For example, the one that got a lot of focus was real estate, but there's probably a lot of sectors that hasn't necessarily been put through analyst estimates in some parts, I'd say, and that could then be quite negative.
And Georgina, you also have a pretty balanced risk exposure between credit and equities. Does that change as we get into the winter months?
Yeah, I mean, I think that, look, we'd still say there's a bit more risk sitting in the equity space. I mean, I think what's quite interesting from a leverage perspective is looking down the market cap spectrum a little bit, look towards those smaller and mid-cap companies where they're more reliant on, say, bank lending, and so therefore they're seeing those higher borrowing costs. So, yeah, we're still a bit balanced. We think it's too early to make a big call in terms of risk on, so it's really trying to get a little bit of balance between a bit of high yield, a bit of equity, but actually looking more at relative value opportunities in this type of environment.
Georgina, what do you do with China? So Country Gardens are rebounding as there's been this bond extension, right? I'm not sure. Every 2 days we have good news, and then the 2 days afterwards we have bad news. Yeah. So how does that figure out in your complex portfolio exposure?
I think what's interesting about China is we all got excited about China at the end of last year, coming into this year. It was on its own path. It was doing something different from a policy perspective. I think, look, all eyes on China a little bit in terms of that impetus to global growth, but it's not going to be the big decisive turning point for markets that everyone's been waiting for. So I think the drip feed is there. I think what's interesting is the propping up of property, whereas they actually wanted to focus on a more balanced view of growth. So we're watching for that to make sure they stick with that view of where they need to point and press policy, so get some of that more self-sustaining investment, and then you get the ripple effect to the rest of the world, and that's more important for global equities.
And Georgina, do you think the ECB holds fire?
I think they should, but I think, look, even with the data today for the UK, I think the pressure's on for them to keep going. But I think, on balance, they pause for now.
Okay, thank you both. Jo Easton there and Georgina Taylor from Invesco, where she's head of multi-asset, stays with us. Coming up, signs of cooling. UK unemployment hits the highest level since 2021. Wage growth remains elevated. We'll focus on the UK next, and this is Bloomberg.
If we don't change course, we are going to see taxes going up. And how do you change course? You have to increase growth. And you'll be hearing a lot from me in the months ahead about how we increase our growth levels.
Well, that was the UK Chancellor of the Exchequer, Jeremy Hunt. Now, UK wage growth held at a record in 3 months to July. Average earnings, excluding bonuses, 7.8% higher than a year earlier. But the hot labour market is showing signs of cooling, with unemployment reaching the highest level since 2021. Well, here with me, Georgina Taylor, head of multi-asset of Invesco, and Anna Andrade from Bloomberg Economics team. So thank you both for either sticking around or joining us. Anna, I mean, is this like a perfect storm for Governor Bailey? If you look at the rapid pay growth, does it just mean that they need to keep on hiking?
Hi, morning. So yeah, I think so. I mean, today's data was overall very strong. Just because we didn't get a surprise in wage growth, as we've been, used to over the past months, doesn't mean that we should be, or the BOE should be, any less concerned about the level of wage growth, which is still, in the private sector, is still running at above 8%. The labour market, is true that it's cooling, but again, what we saw in today's data is that it's cooling at a very, very gradual pace. So that's unlikely to kind of shift the dial at the MPC. If you're looking for dovish or like a weak data detail, then the softer pace of underlying wage growth, so month on month, on a 3-month basis, annualized basis, that has kind of turned. But again, it's just one data point, and I don't think it will be, enough to change the BOE thinking.
But so, Anna, what's the danger actually of for the BOE right now? Did they over tighten or not tighten enough?
I think, there's always, as we get to this kind of late stage of the cycle, that will be kind of the hard, difficult question to answer. But I think from what we heard from them is that they're more concerned about doing too little than doing too much. It's true that we've been hearing some, dovish communication from the, Hugh Pill and Andrew Bailey as well in recent weeks, and they kind of tend to focus more on fears of risk of over tightening and of being near the top. But again, if you look within, within the lines, they also say that they want to take levels to a sufficiently restrictive level, and that they want to see the job through. So I still think that they will prefer to do a little bit more than less.
Okay, Georgina, what does this mean for UK assets?
It's difficult because I think we'd probably be slightly more in the camp that for Bank of England credibility, they need to keep going. They have their inflation mandate. They have to stick with that. And again, as you've said, this one data point does not mean that it's decided either way. For UK assets, though, I think there was an immediate move in the sterling to say, well, does this mean interest rate differentials support the pound? I think we're heading into policy mistake territory, potentially, because we've got such a unique inflation environment in the UK that I don't think there's that kind of linear relationship between growth and inflation. So I think for us, probably leads to a weaker pound at some point because we start factoring in weaker growth, not just higher interest rates. But I think the UK market is not the UK economy. And I think there are sector trends like energy, we mentioned earlier, that could support UK large caps. Maybe mid caps is where the risks still lie for the UK.
And I guess, you argue that basically regular pay growth in the private sector is the most important, detail in this jobs data. Have they lost control? I mean, it kind of feels like it has a mind of its own. It's, fell slightly, still 8%. How many more rate hikes do they need to do to try and get that under control?
Well, I think there's two things. I think there's you're definitely right that, the level of wage growth is too high for them kind of the optics to engineer a pause are not good. You cannot really stop the hiking cycle when wage growth is at 8%. But then again, there's two moving pieces that are kind of, let's say, more benign for the outlook for wage growth, and one is inflation expectations. So inflation expectations have been falling, and inflation will fall, and in October we'll get another big drop based on energy. So as inflation expectations adjust downwards, so will wage growth. And then the second piece is that the BOE has delivered, it started its hiking cycle in December 2021. We've seen nearly half of it being passed through, but there's still half of it to come. So, at some point, it doesn't mean that they will continue hiking forever. At some point, they will need to shift, and focus on the level of the current, of the interest rates and how much tightening is still to pass to the economy.
So do you see any value in small caps? I mean, you're saying, of course, rightly say, if you look at the market, it's not the Bloomberg, the UK economy, but also there's a huge shift or a huge difference between small caps and the big ones.
I think, look, in aggregate, I think the mid and small caps still look a little bit vulnerable. It links in with the leverage points, the pass-through, the demand that might get impacted. I think from a single stocks perspective, there'll be some great opportunities in terms of really looking at where we're linking into the right trends that are coming through in the UK. But I think from a kind of asset class perspective, just waiting and seeing in terms of how, again, the lagged effects of this tighter rate cycle that we've seen so far and how that feeds through.
So do you go for sector-wise, or is it exposure maybe to other parts of the world that are also stronger?
Yeah, I mean, I think, look, in the UK, I think go large cap. I think large versus mid is still an opportunity, because if we get that weaker sterling feeding through, some of the sector trends we've talked about support, I think still probably the larger cap stocks over the mid and small. And then I think you look elsewhere. Look, the US still looks expensive in all of this. They don't get so much help in terms of moves in currencies. So a little bit of value outside of the US coming through, and again, balancing that with credit as we talked about earlier.
Is there anything else that you're looking for in the next couple of days ahead of that big decision on the 21st?
I mean, we'll have CPI data next week, although we don't expect the trends to change meaningfully. The picture there has been, we actually expect headline inflation to tick up a bit based on fuel, but services inflation surprised the BOE in the last release, and we expect it to remain, above what the BOE had projected. So, the story of strong cost pressure in the economy is not going to change, with the next data release.
Great. Thank you both for joining us. Georgina Taylor, the head of multi-assets of Invesco, and Anna Andrade from Bloomberg Economics. Now, coming up, Jamie Dimon is not happy with the bank's higher capital requirements. He did not mince his words. We'll bring you part of that conversation with JP Morgan chief executive. That's next. And this is Bloomberg.
The Federal Reserves have a little humility. They're the ones that told the world rates aren't going up. And it wasn't the Federal Reserve in general, it was each one of them independently. In fact, it was each central bank. So if I were them, I'd have a little more humility over stuff like this.
Well, JP Morgan's Jamie Dimon, they're taking aim at regulators over higher capital requirements. Now, let's take a look at some of the corporate news now, and shares in packing company WestRock up in pre-market trading. That's after agreeing to combine with Smurfit Kappa. Now, the $11.2 billion deal creates an industry powerhouse domiciled in Ireland. Now, the new group will be called Smurfit WestRock. The deal will create a packaging giant that provides everything from corrugated storage boxes to beer carriers and e-commerce shipping materials. Now, Oracle shares are slumping in pre-market trade after a slowdown in quarterly cloud sales growth. The cloud's unit revenue jumped by 30%. That was down from the previous quarter's 54% gain. Oracle is also focused on expanding its cloud infrastructure business to better compete with the likes of Amazon, Microsoft, and Alphabet. And the Ryanair chief executive has slammed Italy's proposed cap on airfares. Michael O'Leary told Bloomberg the price decree is, quote, illegal and completely unenforceable. Now, he says the Italian government has also failed to explain how it works. O'Leary said the airline would consider thinning out its domestic flight offering in Italy should the government hold on to the price cap and instead offer more international flights into Sardinia and Sicily. Then the other thing we're watching out for is Bitcoin briefly dropping below $25,000 for the first time in 3 months. There's speculation that FTX could begin sales of digital assets through its bankruptcy process, weighed on other cryptocurrencies. Now, the largest digital currency slumped as much as 3.3%. 3% yesterday. And then U.S. cable company Charter Communications is set to offer Disney's flagship streaming service at no additional cost to its subscribers. Now, America's second largest cable provider will include Disney Plus in a $60 a month Spectrum TV Select offering. Sources say Charter will pay Disney a wholesale price for the service. Now, pound actually extending some of the gains after we had the labour market data providing respite for Bank of England policymakers, but it does signal some relief for Britons who saw the real wage growth in 16 months. So Britain's red-hot labour market is showing signs of cooling as unemployment hit the highest level since 2021. The number in work declined and private sector wage growth also eased. Coming up, we're joined by Ralph Schlosstein. He's Chairman Emeritus of Evercore. As chief economist, and major banks see the U.S. dodging a recession. We'll discuss that and much more. This is Bloomberg. Arm's IPO book is set to close a day early in what looks likely to be the year's biggest listing. Tech Tuesday, Tesla drives gains on Wall Street after an analyst call. Apple set to launch a new iPhone. Plus, UK wage growth remains at a record high, putting more pressure on the Bank of England to raise rates again. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Federal Reserve is done raising interest rates and will likely cut them in 2024. That's the view of chief economists at some of America's largest banks. While the U.S. might dodge a recession, economic growth looks set to slow over the coming quarters. Well, Ralph Schlosstein, Chairman Emeritus of Evercore, joins us now. Ralph, it's so good to speak to you. We've been trying to set up this interview for quite some time because I want to understand from your perspective what is going on in a lot of the companies. Interest rates have gone up quite significantly.
Right.
Can the U.S. really dodge a recession?
We can. I don't think it's a certainty because what we really don't know is what will be the effect going forward on the real economy of the large increases in interest rates we've had already. Whether the Fed raises again another 25 basis points, I think, is really not a big deal, one way or the other for the economy. The real question is, what will be the effect over the next 6 to 12 months of the 500 basis points of raising that we've already had?
Why is it taking so long? So usually it translates, what, like 12, 18 months down the line?
Yeah, but if you think about it, we started raising last August, September, July. So we're really in the early part of that 12 to 18 month period of time. And the larger increases have really occurred 6 to 9 months ago. So, you know, there's another big factor affecting monetary policy and interest rates and their effect on the economy is that we had this massive stimulus in response to COVID, and that's been rolling through the economy and it's still being spent. So that's probably mitigated somewhat the impact of the Fed tightening.
So is there a risk that the Fed actually over-tightens and then have to quickly reverse and cut?
I don't. I think the risks now are pretty symmetric. I've been saying for the last 15 months that the risks of overshooting were much higher than the risks of undershooting. And the reason I said that is that the Fed was legitimately and appropriately spooked by the fact that they had overused the word transitory 15 months ago. And so they kind of lost their bona fides in fighting inflation. So that's a terrible thing for a central bank. So they had to do everything possible to convince the markets and participants in the economy that they were serious about fighting inflation. I think we're now seeing real progress on fighting inflation. Inflation is coming down. Labor markets are weakening a little bit. So now I think the risks of over-tightening and under-tightening are asymmetric.
But inflation is coming down, and it wasn't only the Fed, right? The ECB was also saying the same, that it was transitory. Is there a risk that actually inflation's coming down on its own, and so coupled with those interest rates rises, we're going to see, if not a recession, certainly a lot of companies go bust?
I don't know about companies going bust. Well, there's a fair amount of leverage, and rates have gone up a lot. So highly levered companies clearly are vulnerable. Going bust, what normally happens is they restructure, they reduce their debt, the equity holders sacrifice. So I don't think we're going to see anything approaching what happened in 2008. I'm not worried about that. Could we have a mild recession? I think the chances of that are 50-50, 60-40 maybe against. I'm not as positive as other observers of the markets that we're going to escape recession.
Ralph, when you look at also the unwinding of QT, like what's most perplexing actually in all of this? I don't know whether it's market behavior or it just feels like we're not sure where we are in the cycle, and we're not really sure what the economy looks like. I think we've gone from like soft landing to hard landing to no landing to soft landing.
Yes. Well, this is, I've said this before, the most uncertain period of time about the economy that I can remember in my 40 plus years in finance. Not the most scary. No. 2008 was scary, COVID was scary. I don't think we're going to have any kind of a catastrophic event. But, when does the Fed stop tightening? Where do they stop? What effect does that have on the economy? Do we have a recession? There's a phenomenon that I've seen, which I've never seen before. When I meet with CEOs of companies, every one of them says, my company's doing great, but the economy's not doing that well, and so-and-so's company over there isn't really doing that well. I've never seen that. And that's indicative of a high level of uncertainty. Now, with respect to quantitative tightening, so far we've seen a pretty material shrinkage of the Fed balance sheet, and longer rates have gone up, but not in a uneven or scary way. I do worry at some point with the Fed coming out of the market as a buyer, and the dollar at some point weakening, that it becomes a little bit harder to finance the very large deficits that we have, and if that happens, long rates will go up.
So it's interesting what you say about chief executives. What does that mean they do with investment? So at the moment, they're still hiring. We're certainly not letting anyone go.
Yeah, they're hiring and they're investing in their own business. The implication, I think, is that the business of Evercore, mergers and acquisitions, has been slow over the first 6 months. There's lots of things that almost every CEO wants to do strategically. I would say today they're more actively discussing those things than they were 6 months ago, when there was more a deer in the headlights view about the economy. But we're still not at the point where people are prepared to take big actions on the scale that they did in 2021.
So does that mean underinvestment, or does it mean?
I think we're still seeing pretty significant investment in people's own businesses, and employment is still growing. And I think there is a phenomenon because of the recent challenges in hiring people, the inequality between job openings and people looking for jobs. Companies are clinging a little bit more cautiously to their employees, particularly their high quality ones, than they might in another uncertain economic period.
Ralph, you look at, M&A is a funny thing because you do it in good times and bad times.
Yes.
You probably do it for the good reasons or the right reasons in good times because you want to grow and get better and get into new market share. You do it, I don't know if it's desperation or to help someone out in bad times. Is there a danger that we'll have a pickup in M&A activity for the wrong reasons?
I don't think so. I think the days of CEOs doing transactions to mask problems in their own business are pretty much behind us. the performance of those transactions has been so bad from a stock point of view that both CEOs and corporate boards are a lot more cautious about transformational transactions. And then, of course, you have the regulatory oversight as well, which the whole antitrust is a little bit more aggressive than it was historically as well.
And do you think when there is a pickup in deals, is it mainly domestic, or are there also going to be cross-border?
Well, I think the whole world is becoming a little bit more onshoring, nearshoring. So the transactions that were designed to dramatically expand a company geographically probably are going to be a smaller share of activity over the next few years than they have been over the last decade.
Ralph Schlosstein, thank you so much for joining us. That was the Chairman Emeritus of Evercore. Now, coming up, Morocco says it needs to rebuild at least 30,000 homes and hundreds of schools, hospitals, and other infrastructure after its deadly quake. We'll discuss that just ahead, and this is Bloomberg. Now, Morocco's prime minister has pledged to help survivors of the earthquake that has killed more than 2,700 people. For more on this, we're joined by Bloomberg's Abir Abu Ammar in Dubai. Abir, so talk us through this aid, as well as the IMF and World Bank meetings next month.
Good morning, Francine. So yes, the Prime Minister came out and said that Morocco will need to build over 30,000 houses, as houses in villages close to Marrakesh have been completely destroyed. This aid also includes 500 schools, hospitals, roads, and multiple other infrastructure. The death toll, unfortunately, has surpassed 2,800 people, with thousands more that are critically injured. The Prime Minister's pledge comes as rescue teams, including from overseas. We know that Morocco has sought help from at least 4 countries, including the UAE, Qatar, UK, and Spain. So they want to reach those remote areas where anger has really been brewing over the government's, well, not lack of action, but the action hasn't been as momentous as people have been expected. And then as for the IMF meetings that are supposed to take place in the mid of October next month, we know from sources on the ground, our reporter on the ground who's interviewing people and talking to people, quoted one of the Moroccan officials who said that the show will go on. Those IMF meetings are still set to happen, and the decision on whether to go forward with this event is really up to the Moroccan government's hands. We know that the IMF and the World Bank have stuck to their statements and told us, listen, our sole focus right now is on the people. No further statements have been given, and this wouldn't be the first time that the IMF holds meetings amid a catastrophe. We know that in 2018 in Bali, after the tsunami that killed over 4,000 people, the IMF continued with the annual meetings with then Director Christine Lagarde touring the site of the destruction.
Abir, thank you so much for the update. Abir Abu Ammar in Dubai. Now, North Korean leader Kim Jong-un has arrived in Russia on his luxury armored train for a rare summit with the Russian President Vladimir Putin. The U.S. believes the talks will focus on supplying weapons for Moscow's war on Ukraine. Now, for more on all of this, we're joined by Bloomberg's Sang-Min Cha. So, Sang-Min, Kim has arrived. Where is he headed to next, and when is the summit with Putin?
That's right. He has arrived in Russia. We know that he just got out of his luxury armored train. He was welcomed with a ceremony at the Kazan station. From Kazan to Vladivostok is just 150 kilometers away, so it's actually a short trip. But we don't know if he's really headed there, and this is pretty normal. It was actually the information that's not being shared. It was pretty common, and it's even worse during his father's times. So he has some options in the Far East region of the region or the area, but he will be around the region where the EEF, or the Eastern Economic Forum, is happening right now. Putin just made a speech in the plenary session there, and we know that the two leaders are going to meet sometime this week, but Kremlin had said that it's not going to be during the EEF, so we're thinking maybe it would be tomorrow or the day after. This date is just not set yet, but the two will be discussing a lot of things, and this is quite of a landmark summit it will be, as it is happening for the first time in 4 years again.
So what does Putin want from Kim, and what does Kim get out of the meeting with Putin?
Putin definitely wants North Korea's help on the munitions. North Korea is one of the countries that has the largest stockpiles of weapons in the world, and they have these Soviet-era system weapons that are interoperable with Russia. So these are some of the artilleries or artillery shells, and even the anti-tank missiles that Putin can benefit of from Kim Jong-un. But what Kim Jong-un gets out of this meeting would be any arms deal would really benefit North Korea's faltering economy, as well as any food. They have been always seeking any humanitarian assistance on food. Also, he will need technology transfer for his pet projects like the submarine, nuclear-powered submarine, as well as the spy satellite that he has been wanting to put in the orbit.
Thank you so much, Bloomberg's Sang-Ming Cha there on the very latest of this pretty extraordinary meeting. Now, coming up, Apple launches a new iPhone today. We'll bring you all of the details on that and, of course, their Qualcomm chip deal. That's next, and this is Bloomberg. Welcome back. Now, Apple's latest iPhone will be unveiled today at 10 a.m. California time. The company will also sell a made-in-India iPhone today for the first time. Now, the MacBook and iPhone maker also just renewed their contract to get modem chips from Qualcomm. Joining us now for the very latest is Matt Bloxham from Bloomberg Intelligence. Matt, we're all excited. I know Qualcomm is a big thing, but come on, tell me what's in the phone. Is it going to be like super good, super different?
Well, I don't think it's going to be super different, certainly if all of the kind of rumours we've been hearing are true. And I guess in the last few years that the rumours tend to be pretty accurate. So I think, expecting the usual kind of lineup of 4 phones spreading from the kind of the standard to the kind of Pro Max. I think the interesting thing this time is, given that shipments of smartphones have essentially plateaued, here it's about upselling people to the pricier phones. So we think pricing might go up across the range, and certainly at the top end could be a few $100s more. So maybe we're even inching towards a $2,000 phone, which would be quite something. But ultimately, Apple needs to kind of sustain revenue growth or go back to revenue growth from revenue slump. It needs to get people to upgrade to more expensive phones. So the features in the higher end phones might also be substantially different from the lower end phones to encourage that upsell process.
So are they really focusing also on India? Because China, I mean, it hasn't been great news coming from China. Yeah,
I mean, I think they've been trying to focus on India for quite a few years. And I think definitely that'll be part of the story too, because it's a huge market. That's clearly an area where you need to be selling cheaper phones because of the kind of average disposable income. Yeah. And so at the lower end of the range, and you start to see them kind of shift some of the kind of better technology into cheaper phones to kind of lure people into the Apple ecosystem. Yeah, and once you're sucked in, there's no going back. Talk to me about Qualcomm. Yeah, so they kind of re-signed this deal, which I think was a surprise from the Apple perspective and Qualcomm. So this is about 25% of Qualcomm's revenue. So you've got another 3 years of revenue that perhaps a lot of people didn't expect them to get. And I think from the Apple perspective, there's a perception that maybe it's taken them longer to transition to their own silicon in this area, which maybe means some of the more exciting features that you'd expect Apple to develop in-house may be a bit slower to come onto the market than people were hoping. Okay, Matt, as always, thank you so much for joining us. Matt Bloxham there from Bloomberg Intelligence. Now, Bloomberg has also learned that UK's Everton Football Club is close to an agreement to be acquired by 777 partners following months of talks between the parties. Now, the club owner, Farhad Moshiri, is expected to exit with just a fraction of the money invested. Now, for more on this, let's get to David Hillier. David, you're the one who broke the story, right? It's like it's been months of your reporting, talking to sources. So first of all, why is Moshiri selling?
Well, Moshiri's been at Everton since 2016, and it's been an unmitigated disaster for him, really. He spent hundreds of millions of pounds, most of which has gone on players who just haven't performed as well as he or the fans would like. The other thing he has done, though, is he's built a new stadium on the dockside in Liverpool, which will be incredibly impressive, and that will be his legacy. He's been looking to sell for a couple of years now. I mean, things have got so toxic with the fans that board members were advised last season not to attend games because the police feared for their safety.
So what are 777?
777 is a Miami-based financial company, primarily was an investor in aviation and insurance. 21 months ago, one of the co-founders, Josh Wander, decided that COVID had presented a great opportunity to invest in football clubs that had been laid low by COVID. And he's built up a big stable of European teams.
Including Genoa.
Including Genoa,
which is my team, so I don't know whether I need to disclose that or not. But so what are these multi-clubs like 777 actually set up to do?
Well, I mean, the idea behind them is that they kind of pool resources. So they have a holding company, which then does all sorts of things in the centre, like data analysis on player recruitment. They do multi-sponsorship deals across the company, and they kind of try to benefit from economies of scale. And there's a lot of them. About nearly 300 clubs in Europe now are part of a multi-club setup.
And so, David, overall, when you look at some of these games, this is not for the Manchester United, right, of these worlds. It's like some of these smaller companies that they can, I guess, unlock value. Are we going to see more of these medium-sized clubs being acquired?
Yeah, I mean, but it can also be big teams as well. I mean, Chelsea, which was bought for 2.5 billion, has recently bought Strasbourg in France. So it's an idea. Manchester City Football Group has got 11 teams across the world. So it's big and small. But on the medium-sized to small size, the owners say that it's one way of kind of competing with the state-owned bigger clubs.
Thank you, David, for, of course, all of your breaking news and terrific insight into this fascinating world of football. That was David Hellier. Now, in other football news, Lionel Messi is buying a waterfront mansion in Florida, costing almost $10.8 million. Now, the football superstar, was lured to the U.S. by a blockbuster contract. Messi joined Inter Miami earlier this year in a watershed deal for U.S. football that saw him spurn an offer from Saudi Arabia. Now, let's also take a look at what events we're following today away from football, although I know we're all obsessed by football. In a couple of minutes, 10 a.m. UK time, it's Germany's ZEW survey. There will be particular interest in this release, given concerns about the weakness of the country's economy. That's, of course, followed by Brazil's CPI at 1 p.m. Inflation set to rise again in August to near the upper limit of the target's tolerance band. And lastly, BOE policymaker Catherine Mann is due to speak at an event in Ontario on post-pandemic economics. Up next, Bloomberg Surveillance Early Edition. Shonali Bazek in New York, Danny Berger in London, and this is Bloomberg.